Are we currently setting up for home prices to drop? We just got news that existing home sales declined for the fourth straight month. At the same time, we're seeing inventory levels build where we're sitting at 2.6 months of supply, while the Fed is raising the Fed funds rate and Powell is coming out and saying we need a bit of a reset with regards to home buying. So what does all of this mean for home prices? If you're a buyer out there, if you're a homeowner, you probably have some concerns. So in today's video, we're going to walk you through the idea of prices dropping, what that means, what that may look like in the future. Before we dive into that though, I want to ask a favor. If you'll hit the thumbs up if you find any value in today's content, and also leave me a comment below. What are you seeing happening with home prices? What do you think the next 3-6 months looks like with regards to the price of homes? I'd love to know your thoughts, so leave them below. So we started off this past week with interest rates rising yet again. And as I mentioned, we're getting existing home sales data that shows a decline for the fourth straight month. So what does this actually mean? It means less people are actually closing on properties. The data that we have is from May, which means these are buyers that likely went into contract in March and April and actually closed in May. And interest rates were lower then. Interest rates were in the 5% range at that time. Since then, we've seen interest rates continue to increase, somewhere around mid 6% for many well-qualified buyers out there. So with that said, we're likely to continue to see existing home sale numbers decline, which means that less people are going under contract, which means less buyer demand out there, which means more supply of homes, which means housing price crash. Well, that's what I want to take a minute here and talk about. Before we dive into that information, I want to talk about why. Why have we seen so much buying over the last couple of years? Now, you've heard me talk about millennials becoming prime buying age when they're turning 33 years old. That's typically the age when most first-time home buyers start to look at buying property. And we had the largest generation in history start to turn prime buying age over the last couple of years. So that's added buyers to the pool of potential buyers out there. At the same time, we saw interest rates decline significantly. And because of that decline in interest rates to super low historical levels, I think we saw a lot of demand actually pulled forward a couple of years because many buyers out there thought that they may never see an interest rate that low again. And many buyers out there at the same time saw prices continuing to rise and got scared. And therefore buyers pulled the trigger maybe earlier than they would have otherwise, which grabbed a lot of the demand that would have happened over the next couple of years and pulled it forward to the time during the pandemic when inventory levels were already low. And this created more of a problem because of the lack of inventory. And this is one of the primary reasons that we saw home prices shoot up so much so quickly. But because we saw such rapid increase in prices over that 2-year period, 35-40% for many markets out there, many home buyers or potential home buyers want to think that the next move has to be a drop in house prices. So I want to talk about what has to be true in order for home prices to drop. Now, as we talk about this, I want to talk about, first off, who are the people that are talking about a drop in prices, a crash in prices, if you will. Typically, they're renters. They're people that don't own property. Maybe they got priced out of the market. The market just shot up too much. They can't afford to purchase what they want to purchase. Or maybe there's somebody that sold a property a couple of years back, sitting on the sidelines thinking that home prices were going to decline and missed out on that opportunity. Typically speaking, it's not the people that are living in properties that they own. So the people that are expecting drops in prices are those that are usually envious or jealous of those that actually own homes. Now, some of those people may not be envious or jealous at all, and they just want to see a drop in prices so that they can purchase a property. Maybe they're priced out at the moment. So let's talk about what has to be true in order for home prices to actually drop. Now, when I say the word drop, I realize that's relative. That number is going to change depending on who you're talking to. Now, when I say drop, I'm thinking 15, 20, 25% with regards to a reduction in price. I'm not talking about a decline in prices, because as inventory builds, demand slows, interest rates stay high, you're likely to see home prices continue to move sideways and even potentially go down in some markets out there. Now, one thing I want to be clear and remind you of is real estate is local. So depending on what market you're in and what's happening with supply in that market, you may see more of a decline than somebody in a hot market with very low inventory. So just keep that in mind when people are talking about drops. What are they actually talking about? So for purposes of this video, when I'm thinking of a drop or talking of a drop, I'm talking a number bigger than 15%, probably bigger than 20%. Since we saw home prices rise 35 to 40% over a 2-year period, giving back some of those gains isn't crazy to think, right? The annual appreciation over the last 50 years with regards to home prices is somewhere around 4.5 to 4.6%. So when you see home prices jump way above that trend just in a couple year period, at some point home prices are likely to move sideways and even potentially down in some markets to get closer back to that trend line. And that might take a year, it might take 3 or 4 years of sideways, potentially downward movements in some markets for those prices to decline. But let's talk about what happened the last time we saw a decline in home prices, because that is what everybody wants to reference, right? It's really the only time in history where we've seen a crash in home prices. And people want to say that that's what we're headed into. So during that period of time, we had a very large supply of homes. We had over 12 and a half months of supply. Today, we sit at 2.6 months of supply of homes. In addition, we had a lot of distressed sales, people that couldn't afford to keep their properties. Why? Because they got into a loan that allowed them to purchase with no money down, at 100% financing, many times on a negatively amortized loan or an interest-only loan, an ARM in many cases that was going to adjust. And what happened was we had a global impact on credit to the point where buyers could no longer refinance into new loans at that time because their property values had declined. They had no equity to start, home values pulled back, and now they actually owed more on the home that it was worth, and the loan was starting to adjust. And then on top of that, they had no skin in the game to start with. So when the bank came knocking on the door and they realized that they could actually go across the street and rent the same house for less money than it would cost to keep that property, even if the bank was willing to work with them, it was going to be more expensive to keep that property than it would be to rent another property, likely in similar condition, maybe even nicer than the property that they owned. The buyers decided to walk away. And because of that, we saw a lot of distressed sales, foreclosures come to the market at one time. And now you had a lot of supply on the market. Demand had dried up because credit was gone out there. So you had way more homes than you had people willing to buy those homes, and therefore prices declined significantly during that time. Well, right now, we're not seeing any of the same metrics that we saw back then. As I mentioned earlier, we're currently sitting at 2.6 months of supply, whereas a balanced market is somewhere between 5 and 6 months of supply. So we have about a fifth of the supply we did the last time home prices pulled back. At the same time, we have little to no distressed sales. The foreclosure starts are very, very low. Why? Because homeowners have a lot of equity in their property. At the time of this video, they're saying $27.8 trillion in equity in the system. So buyers that are distressed or aren't able to make their payments, they're able to sell their properties, take that cash, and potentially go rent something. They don't have to walk away from that property, which is what creates those distressed sales. So you don't have that happening this time. At the same time, rents have increased significantly since the last housing crash. As you can see from this graph here, rents continue to increase. In fact, we just got news that rents have risen above $2,000 for the first time across the United States. So it's very, very expensive to go out and rent a property. So unless a homeowner is in full distress, can't afford to make their payment, and can go find something much less expensive, they're not likely to go anywhere. They're going to end up trying to stay in their property and make it work out. And because of that, you're not likely to see home prices move very far. Now, as I mentioned a moment ago, that does not mean that home prices can't decline in some markets, because they can decline. But if you're a buyer out there, or someone sitting on the sidelines thinking that you're just going to be able to go in and pick up a property for significantly less than it was listed just a couple of months ago, the chances of that happening are next to zero. Why? Because inventory levels are still very, very low. Buyer demand, while it has diminished, it's still not anywhere close to where we were during the last housing debacle. And at the same time, inventory level is significantly lower. So we still have more buyers than we have supply, which is what keeps home prices from crashing. Now, if you're one of those people out there that say, well, there's a recession coming, people are going to get laid off from their jobs, they're going to have to sell their property, or they're going to foreclose on their property. Well, we're currently sitting at some of the lowest unemployment numbers that we've ever had on record. And yes, people are going to get laid off if we go into a recession. Some people will think we're already in one, but regardless, we are going to see more layoffs happen, which means that some people are going to be financially stressed, especially as we head into a full-blown recession over the next year. But just because we head into a recession and people lose jobs doesn't mean that everyone is going to run to sell their homes. I'm going to remind you that many home buyers out there have a super low interest rate locked in. In many markets, their mortgage payment is less than it would be to rent another property. So that's something that you have to keep in mind. Housing is something that people have to have. And many homeowners out there aren't just going to list their properties for sale unless they see an opportunity to go live somewhere for less money per month. And because of where interest rates are and have been over the last couple of years, many of those home buyers are going to stay put. They're going to figure out a way to make it work, which is going to keep home prices more or less moving sideways versus dropping. So for the time being, I do see the housing market continuing to slow, continuing to soften. You're going to see more supply, you're going to see less buyer demand. But with that being said, I do not see a crash coming. I don't see a big adjustment with regards to prices, but I do see a slowdown. You might be watching this thinking, Jeb, you're crazy. Home prices are absolutely going to decline, or they're going to drop way more than what you're talking about here. I'd love to know your thoughts. Why do you believe that's going to happen? Back it up with data. Put it in the comments below. I love to read, and so I'd love to know where you're getting your information and why you believe that. Now, if you're watching this saying, Jeb, well, the slowdown is ultimately going to lead to that crash, well, I actually dive into it in a video in detail. Do me a favor, check it out here and let me know your thoughts. For now, I appreciate you taking the time to watch. I appreciate the support. We'll talk again soon. Have a great day. Bye-bye.